If a verified Tesla bull recommended you buy Tesla stock, would you do it? Learn why Cathie Wood thinks now is the time to buy a Tesla. Maintain vigilance and wait and see what the current economy does. Investors in particular have had a hard time keeping up with the most recent developments in the market. Recent market volatility has been significant. As a result, many people who have money invested have debated whether or not to cash out. Find out why Cathie Wood thinks you should invest in Tesla shares at the same time she is in today's video. It's likely common knowledge that Tesla Motors is the industry standard bearer when it comes to EVs, to the detriment of most stocks. The price of Tesla shares has been erratic as of late. The price of a share of Tesla stock is currently $716.66, up $0.25 from yesterday. Some investors are beginning to lose faith in Tesla, but the company still has supporters. Cathie Wood, for one, even encourages investors to purchase in Tesla shares along with her. Catherine Duddy Wood, known as just Cathie Wood, is an American investor, a star stock picker, and the founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that invests in innovations like self-driving vehicles and genomics. She has been termed the most underrated investor because not only are her investing arguments extremely compelling, but she also has a track record of success that belies her apparent lack of investment expertise. Monthly updates from Wood on topics such as monetary and economic policy, inventions, and what to expect in her area are highly anticipated. Several actively managed exchange-traded funds are overseen by ARK Investment Management, LLC, or simply ARK Invest, an American investment management firm created by Wood. Investors seeking long-term growth in the public markets can turn to ARK Invest for advice on how to capitalize on disruptive innovation. Wood just released a video in which he outlines how investors who hang onto their Tesla shares until 2025 stand a possibility of becoming millionaires. Tesla's market share in the electric vehicle market is in the low 20s worldwide, as she said, and she believes Tesla would be able to achieve that. She replied when asked why she set a $3,000 price target for Tesla by 2025. She also mentioned that the percentage is currently near 60% in the United States. Wood reveals that she and her investment firm, ARK Invest, are certain that Tesla will maintain its dominant position in the electric vehicle market. This is especially true if the company is the first to achieve widespread success with fully autonomous driving in the United States. We're starting to think that in the next 5 years, Tesla will not only control the lion's share of the electric car market, but also 20% to 25% of the entire auto market by the year 2026. Wood was also questioned if she was concerned with the news that Elon Musk had been selling Tesla shares. She assured me that she is unconcerned, explaining that she sees Musk's action as him wanting to explore his options in light of the tax ramifications of his wealth management. According to her, Musk is doing this to pay for the alleged tax bills. When Bernie Sanders tweeted in the fall of 2021 that we must demand that the incredibly wealthy pay their fair amount, Elon Musk responded, "I keep forgetting that you're still alive." It was quite a show. Sanders' tweet was liked 280,000 times, and Musk's response was liked nearly as many times, 290,000. Now, on to other matters. According to Wood, on the sell side, we serve as a liquidity provider. Liquidity providers are defined as market brokers or institutions that act as market makers in a certain asset class. Simply explained, liquidity provider is fundamentally equivalent with market maker. Their job is to make it easier for people to purchase and sell stocks and other financial instruments by pooling together the shares they possess and making them available to the market. In other words, they make securities liquid or easily converted to cash. According to Wood, we typically start selling when one of our equities, even our high conviction ones, has gone up 20%, 30%, 40% relative to the rest of the companies in the portfolio. We call it portfolio management for short. She suggests reinvesting some of the proceeds from a stock that has performed exceptionally well relative to the rest of the portfolio into other stocks that may have been overlooked or unfairly punished. A liquidity provider, on the other hand, will sell when other investors are enthusiastic buyers, and will buy when other investors, such as speculators or hedge funds, are bearish. Would you be interested in buying Tesla stock with Cathie Wood? Please leave your thoughts in the comment section. Tesla claims to be 3 to 4 years ahead of Lucid and Rivian in the battery race. Both Rivian Automotive Inc. and Lucid Group Inc. are American corporations involved in the production of electric vehicles and related technologies. As a matter of fact, Wood claims that Tesla is years ahead of the competition. She attributed this to Tesla's innovative strides in the field of batteries, particularly the incorporation of silicon into anodes and the exploration of ultracapacitors. As a result of these factors, Wood estimates that Tesla is 3 to 4 years ahead of the competition. Even Morgan Stanley's global head of cars and shared mobility research, Adam Jonas, declared the business a winner in the EV race. According to him, the current state of the electric vehicle market is a competition, and Tesla is now in the lead. The EV race, he added, should be viewed as a marathon. At the 21st mile, Tesla has taken the lead. Others have already run 2 miles or are still tying their sneakers. Tesla's choice to create its own artificial intelligence chip is what Wood thinks to be the true innovation. In 2018, the public have access to Tesla's detailed design. Since then, they have been collecting billions and billions of kilometers of data. Despite the fact that, properly speaking, it is their robots that have been doing the data collection. Cathie Wood thinks corner cases are where the action is. She revealed that the first phase of Tesla's fully autonomous driving pilot test has begun, staffed by the company's most experienced and cautious drivers. These motorists needed a score of 98 or 100 to pass the test. According to them, it's a dream when it works, and it is horrifying when it does not work. These seasoned, cautious drivers are at the wheel of Tesla, pressing a button to guide the vehicle. And then Tesla receives the film or video to help them see where they went wrong. Drivers click the said button every time there is a miss, whatever that miss is, which is most commonly stopping due of doubt. Wood believes that Tesla will be able to refine this over time, and that within a year, more individuals will have had an experience in an autonomous vehicle. The total cost of ownership for an electric vehicle is less than that of a gas-powered vehicle, as stated by Wood. With subsidies, we anticipate a sooner time frame of 1 to 2 years. How much electric and gas-powered cars really cost? We anticipate that the price of electric vehicles will fall to below that of gas-powered vehicles and then continue to fall. Our most recent estimates place the average price of an EV at around $15,000 by 2026. Wood added that the reason they believe that there is going to be quite a deal of commoditization is that they believe that autonomous vehicles will be taking off by that time. She also noted that at that time, autonomous vehicles will be operated in autonomous taxi networks, making fleets and design less crucial in the quest to perfect their ability to transport passengers from A to B. In fact, ARK Invest revised its valuation of Tesla, projecting a best-case scenario price of $4,600 for Tesla stock in 2026 and more than $20,000 by 2030. In 2026, the new open-source Tesla model used by ARK predicts the stock will be worth $4,600 a share. 75th and 25th percentile Monte Carlo results are used to tune the bull and bear cases to $5,800 and $2,900 per share, respectively. These forecasts and assumptions may change as a result of economic factors, which would have a knock-on effect on stock and market values. Obviously, ARK Invest and, ultimately, Cathie Wood have based these calculations and facts on much thought and study of Tesla stock fluctuations and Tesla's most recent advancements. Watch our other films about the Tesla stock and see what else we have to offer.